Well everyone, I'm back, and I actually really miss making these videos. As I mentioned in my last Watch This Wednesday video, I have been doing a real estate class that I've needed to take because I have this really exciting and great opportunity coming my way, and one that I'm going to take full advantage of, and once that kind of comes to fruition a little bit more, I'll gladly share all the details with you. But since I was in this class all week, it was literally me sitting here for 8-9 hours a day listening about different real estate laws, so it's not the most exciting thing. I didn't have that much time to research a stock. So I figured this would be a really good week for me to do a stock that was suggested by one of you. And thank you, Billy, for the suggestion. And the stock we'll be taking a look at this week is Comcast. Hey everyone, thanks for joining me today. My name's Matt, and as I mentioned in the intro, the stock we're going to be taking a look at this week is Comcast. Now I'm aware it's Friday, couldn't make this Wednesday, but I wanted to make sure I got this video out to you this week. And before we really jump into this, I just need to say this is not financial advice. Please don't take this as financial advice. If you do need advice, please go speak to a financial advisor. Make sure they're a fiduciary. Those are the better people. But take everything I say here with a grain of salt. This is just for your entertainment purposes only. And I'm sure you guys have heard me talk about Billy before because he's been a long-time supporter of my channel. I think since before I had like 100 subscribers, and now we're over 400. So we've come a long way since then, and he's been giving me a lot of tips for my channel, which has really helped me grow as well. Biggest one that I will eventually take care of, though, is putting something on this wall so it's not as bland. Just haven't gotten around to it yet. And my initial plan was to actually just take this suggestion at face value and go ahead and just buy it, and then kind of just make a really quick video saying I bought this as a suggestion. Let's see how it plays out. But I just couldn't bring myself to do that. And then I thought maybe I can just make one of those videos, people that thumb through presentations and just point out random stuff. But again, that's not my style because I like to kind of do all that stuff on my own and then break it down to you in the simpler terms, less boring cut and dry stuff, even though sometimes my videos can be a little cut and dry. So I couldn't do that, but man, Comcast is a complex company, and that was not an easy sentence to say, but they have a lot going on, so this will be a little bit more high level of an overview for Comcast. I guess just in case you're not familiar though with Comcast, just a quick background info. So Comcast is the second largest TV provider or telecommunications in the world. They are also the largest internet provider in the United States. Some brands though that you might recognize underneath the name for Comcast would be NBC and all their sub-brands, so MSNBC, CNBC. If it has NBC, odds are they probably are a NBC brand. Sci-Fi, DreamWorks, as well as Universal Studios, including their theme parks. Now, if I recall correctly, I believe this stock popped on Billy's radar because NBC is the owner of The Office, the show The Office. And The Office will be leaving Netflix soon and going exclusively to Peacock, which is NBC's new streaming service. And I guess maybe Billy corrects me if I'm wrong here. The thought process is that people will follow where The Office goes. I don't really know of many other TV shows that have such a cult following like The Office does, and maybe that would just help with subscriber growth, bring in more money, all of that stuff, and I thought that was the right thought process, which is ultimately why I also decided to look into this company. But with that said, let's go ahead and take a look at some of these numbers here. And before we really jump deeply into these numbers, I want to say that a lot of times TV network stations, what have you, have very complicated numbers because content is very expensive and it's not a cheap thing to own. So they're a little bit different when you take a look at them when you're comparing them to something like a Waste Management or 3M. So the numbers might look a little wonky, but just understand that's kind of a common theme when you look at these streaming services or TV broadcast providers, whatever they are. As always though, we'll start here with the PE ratio, 23.13. Great to see it's below 30. Yeah, it's kind of what I use as a little guess. And to me, that's just a good PE ratio. A beta of 1.02, which is something I like because basically this is going to perform similarly to how the market does, which if you've been following my channel for a while, you know that's what I like to see. Is nothing too crazy, but a little volatility here and there isn't too bad. The dividend yield and payout ratio, now it is a little bit low, but again, as I mentioned, these companies are not cash rich like other companies are because they do have a lot of expenses maintaining for these, owning content. So with a ratio of 1.80% and the payout ratio at 36.61%, that's okay with me. They've also been able to increase their dividend every quarter for the past 12 years or 12 quarters. I'd have to look at that. So they're obviously heading in the right direction with this dividend, but maybe there's a growth side to this as well, and honestly, that's what I'm after. What I really like to see though is the price to sales ratio, because that was only at 2.24, meaning that this company has a pretty low valuation compared to their sales, which could again mean that this has an opportunity to grow in the future. Now, revenue growth being down 3.82%. I get where you see that at first and you think that's a horrible thing to see, because admittedly that was my thought process, but ultimately it makes sense. One of the details I'm going to hit on a little bit later, but one of the biggest factors of that does have to do with the theme parks. Obviously, this is the same struggle that we've been seeing with Disney, where their theme parks have been shut down and that's been hurting their balance sheet. So it only makes sense for Comcast, Universal to be having those same struggles. So I'm not too taken back entirely by the negative revenue growth, especially if we're just taking this 1 year's performance into consideration. But looking forward, that's obviously something I would want to see be positive sooner rather than later. And lastly, this quick ratio, 0.81% or 0.81. As I've been saying, it's okay for this company because they are in a very expensive industry to operate in, so you don't really expect a company like Comcast, even Disney for that, to have very high quick ratios just because of their extremely high overhead. So these numbers here actually aren't too bad for me, and these are the kind of numbers that I'm okay with, because to me these numbers more tell a story of a company that has just been beaten down due to current conditions. So I'm okay with that because I think there's a recovery period, and I don't know if that recovery period has been factored into these numbers yet based on what I'm seeing. That said though, a few highlights from the earnings call that I also wanted to go over with you that made me really excited about this company. Now, their earnings call was mostly focused on Peacock, the new streaming service, which I expected and was happy about because that's what I'm most curious about, because I think that's going to be their biggest driver of growth. To start, they have had 22 million people sign up for Peacock already, and I think they were only expecting around 15 million by the end of the previous quarter, so their third quarter, which is obviously a great thing to see. But as always, I think those numbers can be hard to put in perspective, so just to compare it to its competitors, Hulu has around 32 million subscribers, Disney has around 60 million subscribers, and Netflix has around 195 million subscribers. So that really does put them right on Hulu's tail, and they are hoping to reach around 30 to 35 million by 2024. Honestly, I'd be surprised if it doesn't happen sooner than that, because one of the biggest events that they had to miss out on this year was the Olympics. NBC, Comcast, whatever, is the sole provider or the go-to network when it comes to the Olympics. And I think that's why they released Peacock this year, was thinking, if the Olympics happen, that's going to drive obviously a lot of people to this new platform. But even without that happening, they still exceeded the number of subscribers they were anticipating. And I think once the Olympics come back, whenever that may be, we should really start to see a huge boom in that number of subscribers that they have. So if the Olympics do happen before 2024, then this Peacock service should skyrocket, in my opinion, and using my thought process. Also, they average around $5 in revenue per user per month through Peacock, which doesn't sound like much when you hear it that way. But remember, they have 22 million people signed up for the service, meaning that's an extra $110 million a month in revenue that they're receiving through Peacock. And as you guys know, I love recurring sources of revenue, so I'd be cool with an extra $110 million each month, and I don't really know anybody that wouldn't be okay with that. So I think that this Peacock service, in full disclosure here, I thought this was going to be a failure. I was not looking forward to it. I thought it was a stupid idea. I thought it was already a saturated market. And to my pleasant surprise, they proved me wrong, which is a good thing, again, for me to see. Now, we do have to mention, though, kind of the elephant in the room, and that is the Universal theme parks. But again, to compare that to Disney, it's going to be a struggle for them right now, and I think that's ultimately what is going to hurt their balance sheets temporarily. Obviously, though, I do believe there's going to be a time where people are just going back to theme parks, and hopefully so. And once that happens, that should completely turn around this balance sheet once again. Also, I think one of the things that can really drive those theme parks back in the right direction is they did announce that the Universal parks in Japan are going to have a Nintendo World, which looks super cool and something that I would like to go see. I think I saw that they're going to allow for you to do real life Mario Kart driving, which sign me up for that. That sounds like a blast and something I definitely want to do one day. But I also think it's important to note that it to me looks like Comcast is doing a really good job positioning themselves for the future and adapting with these changing in times with people cutting the cord. And I'll be honest, and I'll be the first to admit, I think they're doing a much better job with that than AT&T is. Now, I have AT&T, I use AT&T, I would not call myself a happy AT&T customer, but you got to choose the cards you're dealt, and I really don't have any other options in my area. When AT&T acquired Time Warner Cable, they really just took it and made no changes to this cable service. And I think that hurt them in the long run. I think that's why Time Warner Cable did not pay off the way that they thought it would. And now they're kind of scrambling to get themselves back on board where everybody else is. Where Comcast admittedly did take a risk and throw their hat in the ring in the streaming service, which again, something I felt was already a little saturated, but they're doing very well with it. This also goes hand in hand with their other business, Xfinity, which, if I'm recalling correctly, is like their broadband service. And streaming and internet service, high-speed internet service, really do go hand in hand with each other. So I think that having this Peacock and then having this Xfinity with all these services, including, DreamWorks productions, as well as things like The Office or Parks and Rec, is really going to help this company out in the long run. So I'll admit, at first I was a little hesitant on doing this company, but Billy, I think you made a really good choice here. So it is one that I'm going to add to the portfolio. Admittedly, I already bought this stock, and I did do it on Wednesday just to try to keep the Watchless Wednesday routine going. So let me get all that pulled up, and I'll be right back with you. All right, and Billy, your stock is already doing better than my pick from last week. As we could see, the Comcast position. Oh, I should say, I bought 100 shares, and I bought it at... So we bought it at $51.16. It's right now trading at around $51.58. So I think that's kind of in line with my expectations with this stock, because I don't think this is going to be one to just boom like other companies have been. But I think in the long run, for this being a dividend-paying company with the potential growth, and if you look on Simply Wall Street, they're a little bit undervalued, I think we have a lot of runway with this one, and it's one that I'm excited about. So we got the 100 shares at around $51.16. As I mentioned, it's beating Smile Direct Club. And just to kind of point out the other ones here, so Pinterest up $432, which is good to see. Man, DR Horton, that one was even earlier. So I don't know. Again, remember, home building is a leading indicator, so we could look at that, but I won't go into those details right now. Etsy up $655, finally. I mean, I'm so glad to see that one actually did turn a profit. I was getting super nervous about that. ArcQ up $732, which is good. And then finally, ChargePoint at a nice $2,338.50. So this portfolio is headed in an okay direction. I don't like having the two losers in there, but you're not going to win them all. And eventually, I think that those two stocks will recover. So that is my review here of Comcast. Now, I'm aware this probably wasn't my best video, and I'm sorry. I almost didn't do it this week, but I just couldn't resist not putting out a video this week, and my allergies are killing me. It's been a busy week, but I love doing these videos, so I wasn't going to let a little allergies and being busy stop me from getting this out here. Again, thank you so much, Billy, for the suggestion. I always appreciate what you do for my channel and just the support you've given me, so it really means a lot to me. And as always, if any of you have any stocks you want me to take a look at, please let me know in the comment section down below, and I'll happily address them there. With all that said, though, I'm kind of starting to lose my voice a little bit here, so thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world, and you're right here with me, and I really appreciate that. But I'll let you go ahead, enjoy the rest of your day, and I will see you next time. Next week, I don't have as many classes, so I will be more available. Anyway, whatever. Thanks for watching. We'll see you next time. Oh, like, comment, subscribe, all that good stuff. I forgot to say it, so if you want to, you can. I don't really care.